Hello, everyone, and good evening, and welcome along to this live webinar. If you watch it on our YouTube channel, feel free to subscribe to get more relevant content. And we have today a special guest, one of our favorite guests, Steve Doran, property investor, entrepreneur, mentor. Hi, Steve, how are you?
I bet you say that to all the guests ever, don't you?
Oh, and you need to check it, I think that you are definitely one of our favorites. So it's always
Okay.
very helpful to have you with us, very valuable insights. So I'm happy. And today we are going to speak about the budget, like the strategies that landlords and property investors should adopt or shouldn't adopt post-budget. Steve, before we start, let me share the agenda quickly. Um, can you see the screen?
Hmm.
So what you want to cover today, we'll start with brief introduction. Perhaps we let people to know you a bit more, Steve. Then we'll speak about the key budget changes. I believe your deck should cover it. I also have deck if we need just to clarify a few points. Then let's have a discussion about where do you see the opportunities right now post budget, and if you look, toward 2026. Checking your current numbers, we'll do like a exercise as we usually do on the landlord deal analyzer, just to take a look on a potential deal and basically try to emphasize which metrics you need to look at, what things you need to take into consideration. Uh, Finding new deals that work, perhaps you can have a few words about that. And then in the end, we have a question and answers session. If you have questions, by the way, feel free to write them on the chat. If it's relevant, we might stop and answer, but if not, don't worry, we will try to answer them in the end. So let's start with the brief introduction, Steve. I believe many knows you, but if not, let's have a few words about you, if that's okay.
Yeah, sure thing. Out of curiosity, I'm guessing there's probably some people I'm meeting for the first time here, probably some people that I've spent some time with before. Just pop I guess a yes or a no if you've seen me before, if you've done some training or done some webinars or something with me before, or a no if this is the first. Hi, Robert, good to see you there. I got a Okay, some heck yeses. A couple of no's there. So nice to meet you, Liz. Nice to meet you, Steve. Great name, by the way. Brilliant name for property investor. Sarah as well. Great to meet you too. Okay, so all right. Well, looks like we've got some familiar faces on, which is fantastic. So I'll give you the brief synopsis. My name's Steve Doran. In a previous life, I was a firefighter. Like many, I wanted to create financial freedom. So I did exactly what everyone here is doing right now. I attended lots of training. I learned as much as I possibly could, and I implemented. That's the key combination to learn and implement. As a result of that, I've now managed to build uh, multiple property businesses. So we have a lettings agency, a deal packaging business, a finance brokerage, rent-to-rent properties, and property investments as well. So uh, I've got a fairly varied portfolio with buy-to-let property, commercial property, everything from offices to retail to industrial unit. Then on top of that, HMOs, short-term let. So we're very diverse in the investment approach. And so alongside that, I'm a property educator. So for many years now, I've been helping other people on their property journey. And I've trained now somewhere in the region of just over 50,000 people in the UK on property investment. So a little bit of experience there. Now, I'm going to frame my credentials here and be transparent because we're going to be talking about the budget. I'm speaking from the perspective of a property investor. I'm not an accountant. However, I am a tax enthusiast, not enthusiastic about paying it. I'm enthusiastic about learning more about tax because I pay an eye-watering amount of tax on an annual basis, as you can imagine, with that many businesses, that much stuff going on. And I found very quickly it's not just about what you make, it's about what you keep as well. And so I read tax books inside out, upside down, and back to front because one of my biggest challenges now is tax. And many people here are obviously here because they want to learn how to be tax efficient as well. So, um, I see some questions coming in the chat. Did you start with funding? No, I didn't grow up with a wealthy family. I didn't grow up. I grew up in the borough of Lewisham. My dad worked for BT. My mum worked for the NHS. I very much had to start everything from scratch. I didn't have anything given, and it was quite a long and arduous road because property education wasn't as readily available as it is now. You know, when I kicked off, you couldn't just jump on a webinar on a Sunday evening. You used to have to drive around to events and you used to have to struggle to find out where they were in the first place. Um, yeah, it says, how far is the crash? I think you've probably seen a large portion of the flattening on the market, if I'm honest. UK market is not the same as overseas market. It's much more robust and resilient, simply because there's a massive undersupply of homes. The government are nowhere near building any their target. They haven't been anywhere near it for the last 50 years, coupled with a massive ever increasing population and the property market, like any other market, is based on the laws of supply and demand. And usually by the time people start speaking about crashes and correction, historically is often when the worst part is through. So we're seeing more stability, I think. And if you're wondering if it's a good time to buy, it's pretty much always a good time to buy, especially for those of you that are planning to hold. But I wouldn't be holding off. You'd be holding for a long time and potentially regretting it. So, yeah, 13 out of 32 in Scotland declared a housing emergency. There are not enough homes for people. Mark Twain said, buy land because they're not making it anymore. Are we covering the budget items? Yes. Leroy's been to an in-person with me. Yes, we're going to be covering off the budget. We're also going to be discussing uh, Landlords tools as well and how you can use those to navigate the property market. Right. Before we get lost in the world of chatbots, would you like me to go through some of those changes and share those? Is now an opportune
Yeah,
time?
absolutely. And Steve, perhaps also you can mention the training. Sarel can put the link if people want to join. We also mention it toward the end.
Sure thing. I
Part of
will
the
do.
introduction, perhaps
And
like a few words about the academy and what people can get out of it.
100%. Out of curiosity, for the people here, just pop an A if you are a part of our academy. So if you're on the academy already with me, or a two if you've been to a 2-day event with me, at the very least. Okay, I thought there were a lot of familiar faces here. And then maybe a no if you've not yet been to any of the either of those with me. If you're not yet, so okay, cool. Not yet. Love that. Fine. Okay, so a few people. So I shall share a bit. I'll go through the budget bits, and then if that's cool, and then I'll share a bit. Let me
Yeah.
put this into a slideshow view. You
For me, it's also what is not in the budget. I think it's also important. I believe you will cover it. I think there are many, I would say rumors before the budget and many things that we thought might happen.
I'm
Uh,
smiling because
okay, okay. I see.
I'm smiling because that's my first slide.
Exactly. And this is the thing that many things that we thought uh,
Yeah,
touched but nothing. But yeah, I think it's even more interesting to speak about those items. Yeah. So over to you, Steve.
very
Let's
interesting.
speak about
Absolutely.
main findings of the budget here.
Just so that you are aware, I was going to say I can't see the chat box. I think I've managed to pull it over there, so that's fine. So yeah, I wanted to kick off with what didn't change because you're absolutely right. There were lots of rumors. I've got my own theories about rumors that spin around before budgets and why they're leaked and what's really going on. But let's go through them. I know we're on borrowed time. So first and foremost, there were no stamp duty changes. That was a big one that was rumored. There were no capital gains tax changes as yet, although that's been floating around for some time. I wouldn't be surprised personally if it does come at some point in the future. It is quoted to be one of the biggest fears of personal name landlords, capital gains tax changes. And the rumor is often that they'll be brought in line with income tax thresholds. So, as it stands, they're fine, but maybe something to consider. One could argue there's no smoke without a fire, right? So, no stamp duty change. I wrote that twice. Don't ask me why. No VAT change. When I say no VAT change, I'm going the headline here. There were actually some changes, but they weren't any changes that would likely affect anyone here.
I think the main rumor was, Steve, that it will go down, the limit will be 30K,
Correct.
but then,
And
they
that would have been
on 90.
detrimental.
Right?
Yeah. The rumor was that it would go to 20K. The threshold itself didn't change. And had it changed, it honestly would have been detrimental for small business. It would have been detrimental for also people buying from businesses as well, because the market would instantly become less competitive. It's a worrying world when small operators are driven out, but it's another story in itself. But that really was, and again, it makes you wonder why some of these things are leaked out and spread around. The art of misdirection and whatnot. So, and no national insurance. That was a big one that was rumored, but we did get the income tax rise instead of, but that was a big rumor as well. So, what did actually change? Let's go into that. So, what actually changed? The first one was the tax thresholds were frozen until 2031. We saw the new mansion tax, which is coming in from 2028. So, Avaram, you must be gutted about that, my friend.
This is
Um,
only for properties that's like above £2 million, if I'm not
Correct,
mistaken.
yeah. So it's only for properties above £2 million. You've got two different thresholds there. I think I've got it a bit further on in the slides, the breakdown.
Yeah.
And then you've got two different amounts. So £2,500 a year. And that's basically a higher value homes that will go alongside council tax, but it will be onto the owner of the property rather than potentially the tenant if you're renting a mansion out. So new tax mansion tax 2028, higher taxes on rental. Yeah, I'll loop back to these. I'm going to open a couple of these up a little bit more. Higher taxes on rental income. So this is a blow, another blow, should I say, for landlords in personal name. Anyone, lots of people here have been following me for a while, so will know that I've been banging on for a very long time to not invest from personal name. And so in a limited company, just to be clear on the point that some people might be wondering, if you're investing from a limited company and you pay yourself from that company, then you still pay the original thresholds, or you still will pay when these change, the original thresholds, which will be 20, 40, and 45% respectively. So it doesn't actually affect that. So this is solely for landlords in their personal name. This is a change. This does not affect companies. And then you've got higher dividend and savings tax, so that's going up by 2%. That one's probably one of the most imminent. That's coming in April 2026. And then salary sacrifice, that's coming in, I think that's 2029. And that one's over 2K, loses the relief. And that's really just to catch people out in that sort of 100 to 130K salary to stop them from being able to claim that relief and have the ability to get the tax-free threshold back. So, in my opinion, the hardest hitting one was the frozen tax thresholds. Because what really happens here, and look, the biggest claim, I don't want to get political, it's not my thing, but the biggest claim was very simply that the Labour government wouldn't put up tax on working people. Uh, I'll ask you guys the question. The tax thresholds were originally to be frozen until 2028. Now, given that inflation is going to pull millions, it's actually going to pull billions. I think it's about 8 billion this will create for the government. But given that this will exactly fiscal drag, given that this will hit every single working person that's being pulled through different thresholds, I'll ask you guys the questions. Yes or no? Would you say this puts up tax for working people? I mean, I'm curious to know what people's opinion is on that. Yeah, without a shadow of doubt. So it's interesting, but the challenge is people outside of these circles and communities, they often don't really notice this or understand this, or they see it as no change. It's not no change. It's a stealth tax, and it's a hard hitting one. So 50k income today is worth roughly 65k in 10 years. Now they will have had this frozen for the last 10 years. By 2031, it originally got fixed in 2021, and so that's a lot more money that's being pulled through. So basically, the tax is going up without them lifting a finger. It's very subtle. They try and slip it in, but not enough people understand it, in my opinion, to kick off about it. So this affects every single investor who pays themselves a salary or dividends because it affects those thresholds. So the landlord tax hike, that's the property income tax, 2% from April 2027. So as mentioned, so if you've got income derived from rental property, it will be taxed at 22, 42, and 45% respectively. So each of those up by 2%. That's personal name landlords squeezed yet again. We saw Section 24 come in. That obviously restricted the ability to offset interest as an expense. I don't think this will get any better. I also don't think they will mess with limited companies. They'd have to rewrite corporation tax law. And 93% of landlords are in their personal name. They're easy targets. So why would they bother? You've also got the likes of um, Blackstone and Lloyd's putting billions into the UK rental market. I don't think they're going to mess, as always, with corporations. So, uh, look, long story short, investment property, please put it in a limited company moving forward. Rents will go up across the UK as a result. Again, really, who does it hit? Working people. Most landlords expect, or more landlords, should I say, expected to exit. People get frustrated with regulation, taxation, legislation. That's not a bad thing for us, by the way. That's an opportunity. More opportunities for investors who know how to structure correctly. We sell properties. We sell a lot of properties from tired landlords that want to be retired. This is the one that you mentioned, Avaram. Annual charge for £2 million home, so 2.5k over 2 million, 7.5k over 5 million, and that kicks off in 2028. My opinion, that's likely to change, expand, or tighten later. I think the government aren't silly. They've been playing these games for a while. So they wouldn't, again, they floated this one at 500k, right? They said, oh yeah, we'll consider, like, I think it was a 0.5% on amounts over 500k, sent people into a bit of a spin, and then this comes in and people go, oh, that's not that bad, doesn't affect me. But the reality is it's in, and then what you'll see is creep, which is pretty common with all of these things. So this will drive downsizing, pricing pressure at the top end. So that's what we're likely to see as a result. So what's the big picture for us investors here? Taxes are rising across wages, dividends, and property income. Thresholds frozen. I didn't touch on inheritance tax, but that threshold's also frozen. Compliance tightening, borrowing still expensive, rental demand remains strong. Supply is falling, which will only have one output. If you've got more landlords leaving, less rental supply, once again, that drives the prices in one direction. So skilled investors would do very well. Most markets, well, I think it was Warren Buffett that said, be fearful when others are greedy and greedy when others are fearful. So if you're educated, supported, you know what you're doing, now would be an opportune time. A skilled investor would be somebody who isn't just doing what people did 20 years ago. So doesn't go to their bank to ask them for a mortgage on a buy-to-let property in their personal name, but rather would go to a broker to get the best type of lending, gets the right company structure, uses the right strategy. Right now, things like HMO, short-term lets, commercial property, there's lots of opportunities that work now that may not have worked before. I know we've got a Q&A at the end, so anything to do with moving properties into limiteds and stuff that's a bit more beyond the scope of this part, so we can always pick that up later, given time. So what does that mean for 2026 strategies? Company structures outperform personal names. They already did, especially if there was borrowing involved, especially if you're looking to pass on assets to children and build family investment companies and so on and so forth. But this is just the continuance of that. And I think we're only going to see more and more high cash flow strategies outperform single lets. Like I say, a standard buy to let now, it probably won't set you financially free. I think the average income is 19, or median income is £19,200 for a standard buy-to-let property investor, and that's before their mortgage deduction and other expenses. So strategies at the moment that we look at tend to be a little bit more advanced, which are still along the same lines, but just a little bit more advanced. Smart tax planning saves you more than most people earn. Creative finance becomes essential. And so the best deals will come from tired landlords exiting the market. We get great deals that we sell HMO properties. We don't tend to sell buy to let. We sell a lot of HMOs, but we see a lot of landlords exiting great properties, but they're getting clobbered on tax. They're in their personal name and they've just had enough. But the properties themselves are fundamentally great. The investments are great. So the problem is market's changing faster than most investors can keep up. The reality is you've got what 2.8 million landlords in England alone, and we've got however many people we've got on here. Not everyone is doing what you guys are doing. Not everyone is keeping ahead of what's coming next. Some people they're just at a point they're getting left behind it. The tax rules are rewriting the playbook, so the way that we do things now is very different, but there's still great opportunities. There's still great things we can do in tax. Stamp duty reliefs available. There's still ways to claim on, let's say, commercial buildings. The building I'm in now, we did an £81,000 capital allowance claim. That was a great tax relief. So there's still good things we can do. We just have to take the time to educate ourselves. Most landlords will lose money without a clear plan. Some landlords at the moment are paying to keep their property. Since Section 24, especially, some people are paying more in tax than that property is actually making. So your advantage, as always, is knowledge, structure, and strategy. So, as Avaram mentioned, I do personally run 2-day training. I think most people here have been on it and done that already. For those that haven't, I'll drop you a link. I'll share for just 1 minute about what that is, how that works. Today, we're going to talk more about tax and a bit of sourcing, I think, or analyzing with Avaram. On this, we'll talk more about the strategies that we do. So, the things we do at the moment, things like HMO properties, how you find them, how you fund them, how you fill them, how you check for demand, how we run short-term lets, holiday lets, contractor lets, how we do commercial properties, find them, and how to build a tax-efficient portfolio, because it's important setting it up the right way. On that 2 days, we also talk about properties in your personal name and what you can do with those as well. How to legally reduce tax in every deal, and high cash flow strategies to replace income, and how to survive and, more importantly, thrive under the new rules. So, if you would like to come along and spend 2 days, the way that it works, we have a 2 days, it's online. We run that twice a month. And so we tend to do it on weekdays and weekends, and we mix it between different days to make it accessible to everyone. You get a one-to-one event success partner for that 2 days. So that's someone from my team. You get someone from my lettings agency, or someone from my brokerage, or one different member of team who will support you throughout the whole 2 days. So they'll be at the end of the phone to answer any questions. We send the physical workbook out to you. On that 2 days, it's interactive. We'll be searching for deals. We'll be talking about private investment, creative funding strategies, and how to build a profitable property a business, whether you're just starting out or whether you've been in property for years as well. So there's some of the topics that we'll be covering off: sourcing deals, negotiating deals. We'll talk to you about our packaging and how we do that and how we make profit from property in that way. Short-term lets, booking.com, how we optimize on different platforms. If someone goes to the website and wants to come along to the 2 days, we charge £399. But for anyone that comes along to training like this, we always reward the fact that they're proactive and they're showing up. And so what we'll do for anyone here this evening is we will do that for just £99. So thank you, Avaram. I think Avaram's just shared the link. So if you grab a ticket, the way that it works, you grab a ticket. Once you've got that ticket, you can either select a date, there'll be some date options that come up, or you can just hold fire and one of my team will reach out to you to send you all of the dates. We've got 24 different dates to choose from, so there'll definitely be something that works for you there. So it will be a pleasure to deep dive on the strategic side of it, how we use spare room, right move, the different softwares that we use to optimize what we're doing, how we analyze deals, calculate the GDV, and do all of that. Guessing most people here that have been enjoyed it because they've come back to see me for some more. In fact, a quick survey of the people that have been, just pop a 99 in the chat if you think that 2 days was a good value training for £99, just for anyone who who hasn't been. Yeah, I thought that might be the case. If you haven't been yet, if you haven't spent that 2 days with me, I'd love the opportunity to support you. To help you along, just tap onto the link that's in the chat box and it'd be great to see you there. So I'll pop it in again because I've now made everyone put 99 and it's it's probably got a little bit far down, but that is the run. That's also the budget side of it. What I'll also do, anyone that does jump on, I normally drop some free bonuses as well. So I'll give you a copy of my HMO books. I've got a book on HMOs, everything from licensing to letting. That's 210 pages. What I'll also do is I've got a book on property tax. It's called Less Tax, More Freedom. And I'm currently rewriting that with the updates from the budget. But for everyone here, and PS, anyone that's on the academy, anyone that's already come to the 2 days, by default, you're going to get the most up-to-date version. That should be ready just over a week from now. I'm just putting finishing touches on that. So you'll also get that as well and a free ticket. So if you want somebody else to come, then you get that. Not bad for £99. So yeah, not a Black Friday, just just an action taker's reward. Jerry said Samuel Lees does it for £97. Well, I don't know I don't know how I was supposed to respond to that. Well, that's good. You can come to both for only 196. Samuel Lees is pre-recorded. Look, you can't put me on the spot like this. What I can say, just so you do know, it is 100% live the entire 2 days. I do know that different people do different training in different ways. We're entirely live. We'll answer questions as you go on. Yeah, I'm not in a position to speak about any property educators. I would say just go to people that you enjoy hearing from. A lot of the information is good across the board. And there's no harm in going to both. £196, 4 days of training. There you go. All right. Cheers. Good stuff. Avaram, over to you, my friend.
Yeah, I can say that for us, it's always a pleasure to have you with us, and your insights, your experience, your knowledge is great. So, highly recommended for everyone. So, I think, Steve, great overview about the budget. Uh, I would say that now technology is even more critical, and this is what we are trying, to promote on Landlord. So I think this is the time when people ask, what they need to do now with their existing portfolio. I think first you need to make sure that your portfolio is accessible in one platform from anywhere at any time. And I think this is what we do on Landlord. So perhaps if I may, I would spend like 2 to 5 minutes just to show people around. I think that most of you know about Landlord. You already have a Landlord account. So Landlord is, as I mentioned, is a one-stop shop. You have everything in one place. We have three main sections: manage, invest, and finance. The manage section, this is the place to manage your existing portfolio. And this is critical because if you have some properties, limited companies, some properties in private ownership, properties with your owners, with different partners, everything can be managed on one Landlord account and you can share it with others. And this is a scoop. We just released the new roles and permissions feature. So if you click on the right top menu, click team members, you can now invite your team members with different permissions. So you can decide if you want to provide them with a viewer permission. By the way, Steve, for you, we spoke about it for your team because now it's basically, I think it's a great for collaboration. So you can decide if you want, let's say, to invite someone to be an editor, but just for some of the managed screens, just for the My Portfolio and tasks, you can do it now. And perhaps you want on My Documents for him to be only viewer, so you can do it as well. So basically, this is something that is now live. You should try it, invite your team members to collaborate, and then basically they can get access to some of the pages as viewer or editors. So let's get back to Landlord. The My Portfolio, this is the place to manage your property details. We store more than 150 different data items on each property. You can manage all the due dates and receive tasks when you do need to do anything. The My Documents is a very strong tool, which you can store documents on any property level, in the property level for each property. You can also share documents with others, and you can also send documents for auto signatures. So basically, on one premium landlord account, you can get like a DocuSign inside, almost for free. And this is if you upgrade to premium, which we have now the promotion. So you go to the settings page, from the account information on the plan details, click upgrade. I think the code Black Friday should be there. It should be until tomorrow available. And then you have the premium plan with only almost £40 and the premium plus for 120, very affordable. And so take the advantage. On the invest section, I will very shortly, I will do a session with Steve on analyzing a deal. You can find source properties to source basically from estate agents, auction houses. You can also source by a category. For instance, if you want to see only properties that are under repossession, you can see it as well. You can apply sourcing alerts. This is part of our premium plan, and get notifications when there is a price decrease or price increase, and when there is a new property matches your criteria. Landlord also has finance options inside. You can find live feed of mortgage products from all the buy-to-let lenders, everything in one place. You can also apply online, and you can get terms for bridging finance as well, and manage the application on Landlord. Everything in one place. Now, Steve, let's get back to our topic. So what I thought is basically we can try to analyze a deal, and then would love to hear your thoughts about what numbers you should take a look if you are looking at comparables, and when you look at the postcode, what basically is important to take into account or to factor in when you are making a decision if to purchase the property or not. So I thought perhaps we can start with the BRR, and we have also the Chrome extension. So if you are now on Rightmove and you want to analyze this specific deal, you just click on Landlord Chrome extension. You decide a strategy if you want to analyze it as a buy-to-let, flip, or BRR, and then click continue to the deal analyzer. Then basically Landlord extracts the information from the Rightmove page. We apply the Landlord AI to estimate the amount of refurb and the GDV as well. So basically you can get everything in one click, and then you can start tweaking the numbers and adjust the deal, the analysis, to see if it's a good investment or not. So you can see that we took the purchase price into Landlord, we estimated the refurb cost and the GDV, and you can see the numbers. But I think perhaps we can start from scratch, Steve, and then let's see where it takes us. I will start with a question for you, Steve. Even if you look at 2026, if you need to choose between those three strategies, buy to let, basically you buy a property that is almost ready to get a tenant in, and then you just generate cash flow and perhaps enjoy the potential property appreciation in the long term. Flip, so you buy a property perhaps under market value, requires some refurbishment, you improve the value and then sell for profit. Or BRR, which is the mix between those strategies. So you purchase a property perform some refurbishment, then refinance at a higher value and start generating income uh, from rent. So if you need to choose now between those three, what would it be?
Abraham, you're gonna hate me.
You
Do you
would
mean
say nothing. Yeah. Okay.
for me personally, or generally? Because it's a difficult question, right? And the question I often get is which strategy is best, or which one should I do? It all depends on somebody's circumstances. So, buying a property that's just letting it out. If you've got funds, and you want to you want to be quick in and just get cash flow, that's fine. But flipping also fine, but I would always make sure you've got a clean exit and that you're checking how fast properties sell in that area, so you don't get stuck on it. But I would also just check that you've got a contingency. So if you were asking me which would I do of the three, which you were, I guess I could have got to this quicker. You always tell me I talk too long. Maybe this is what you mean. But anyway, let's just go with B triple R.
Yeah, because you know what, I will perhaps, reshape my question. So the question is like to keep the properties for the long term or just to look for strategies of, gaining profit in the short term. So
It
basically,
depends, right? So if somebody's wanting to build a pot of cash, then flipping's great. You won't get as much cash as quickly from BRR. If you wanted
right.
to set up an infinite cash flow, build assets, then BRR is fantastic. For me personally, I'm less inclined towards flips at the moment because people can get stuck on a flip if they're not in the right market, if the pace of the market changes. So me personally, I'm inclined towards cash flow. I would prefer to buy something, add value to it, pull as much of my money out as possible, and then keep that for something high cash flowing. For me, HMO, short-term lets, but in principle, a BRR, B triple R. Some people have two R's, some people have three R's, but same thing.
Right. So if we deep dive into this hypothetical deal, so basically I purchased the property at 100K. I performed refurbishment to 9K. Then hopefully the property increased to 150 and I can generate rent of 1200 per month. And then the refinance, so the way it goes, the defaults on the deal analysis is that you will purchase it with bridging finance. So you can get perhaps 75% with a higher interest rate, but this is just for the refurbishment term. And then you are refinancing at a higher value. So if you go to the metrics tab, you will see this metric, the money left in the deal. So the way it goes, you will need to put down a cash investment of 43-ish, 43K to pay the deposit, stamp duty, closing costs, refurb costs, bridging fees, and basically you can adjust the numbers if you want on the summary tab. You have also the bridging loan costs. And then after the refinance, you might get some money back because if you improve the property to 150, you can get a mortgage for 112, which will help you pay the bridging loan and also cover some of the costs that you already spent. So the money left in the deal, this is the metric that basically shows, okay, so after the refinance, how much money actually left in the deal. And what we do in this deal analyzer, we calculate the cash flow from now on. So this is basically the rent minus the mortgage minus all the monthly operating costs. And then we also try to get the future scenarios to provide you with the long-term metrics. And you can also do the best case, check the best case and the worst case scenarios as well. So this is the way we structure the analysis. When you look at the BRR deal, what are the things that you want to look at in terms of, the refurbishment project,
Okay.
how much income you generate? What is more important for people to understand when they,
I
even
think there's a
high
few.
level? Yeah.
Okay, yeah, cool. So I think the key figures for a BRR for me would be Purchase price, what can we get it for? Oh, and we may use this tool to work out what we'd need to buy it for, right? So
Yeah,
we
you
can
can
work that
optimize it.
backwards from the final value. So I'd say, what's the GDV? So what's the value of the property once the work's complete? So let's go backwards. I always like to go backwards with these. What's the value of the property once the work's complete? What's the revenue that's going to be generated by the property? Because we also need to be sure that that's going to generate enough revenue, A, to be worthwhile, profitability wise, but also B, to allow you to get the mortgage, right? So if you don't have a high enough rental revenue that's going to come,
Yes.
you won't have the affordability for the mortgage. So, but you wouldn't want that anyway because it means it's not profitable. So what's the final value in terms of the rental or the income? What's the final value in terms of the actual property value, the GDV? And then I would want to be calculating the refurbs and my costs. So refurb is one of the costs that the more accurate you can be, the better. And of course, the more efficiently and effectively you can deliver a refurb, the better. That should actually bring us down to what's the maximum that I can pay. So again, if I go backwards in that way, and then that's going to vary from person to person. Person A might need more money out than person B, right? Person B might have a bit of cash they can leave in the deal so they can afford to not get quite as much cash back out. But for me, I'd always say to everyone to work backwards. So, what's the final value? Because that's going to be a more definite figure. So, what's the final value? What's the revenue going to be generated? Is it enough for the mortgage? And then the calculation of the refurb. I believe. Did you have some AI tool that gives you a general calculation for refurb, or am I
Yes, we can use the Landlord AI. So
as
first,
like a
click on the
preliminary?
summarize.
Yeah.
Yeah, summarize this current analysis will provide you with first with a brief overview about this property and about the analysis. Uh, and then you can use the web data. So if you want to go to search the web and ask questions about prices in this area, then you can get the answers. But you know what, before you can do it also with the postcode insight. So if you want to take a look on this specific area, you can see here the capital growth in the last 7 years, um, rental stats. So you can see how much rent basically you can get based on the property type. Comparables, you can see recent sold properties in this area. You can see the
Nice.
addresses. It's also available on the map. So if you want to see them on the map, you can just, this
Can
is
you
also
see
part of,
more info about those comparables as well? So we can get the address
um,
we can pull. Okay, so we can get the
okay,
address, the
oh
sale
yeah,
date.
exactly. This is what, yeah, we have this, but then you, of course, you can go to the comparables, like you have the Google Maps link. So you can go and
Nice.
click
I
that.
quite like the map link. So I just throw because from a training perspective for everyone here, if we're looking for comparable properties, what we're usually looking for are things that are ideally within half a mile, so you can sort of figure that out from the map and the scale on the map. And also, ideally, the more recent they were sold, the better. So the optimal would be like quarter of a mile to half a mile. That'd be the optimal, and within the last 6 months. But failing that, within the last 12 months, and of course equivalent sort of size and type of property. But that is, you get a RICS valuer to come around and value a property. That's a large part of what they're going to be basing their valuation from, apart from the standard, obviously, that you finish a property to, but it's going to be sold comparables in that area. So that's cool. And it's nice that it's there. It's funny you've got crime rate because I mentioned this to people quite a bit. I forget that this features on here. If you're comparing different areas, you go, well, the property and the rent, the yield is the same in either. Which one should I go to? But one's got 5 times the crime as the other, then that might help you towards a decision sometimes as well.
So when you look at crime, what are you looking for? Because basically you have average with high crime, average crime, low crime. What?
I put it on a little scale in from 1 to 10,
Mhm.
and my scale is 1 is you walk out the front door and you get stabbed, which is where I used to live. And 10 would be, super affluent. And I would say investment wise, you're often best in like somewhere between maybe six or seven, uh, eight max, let's say between six to eight. And that's obviously, I know it's a broad, like, high level way of looking at it, but you don't, in my opinion, want somewhere that's got too much crime. And same for, I would also check things like unemployment personally, just to get an idea of the area, uh, because you're going to be dealing with different tenants and a different demographic, and so you're statistically more likely to have things like rent defaults. I'm very fortunate in my portfolio in the last 19 years, out of hundreds and hundreds of tenants, I've never had a tenant in an HMO not pay. I had it once in a buy to
Good.
let, and it was resolved very quickly. And that was also the council's fault, not the tenants. But um,
What about commute methods and age population, all this stuff?
yeah,
Would
that's cool. Yeah, that's cool. And I think especially if people are looking into things like HMOs, because some areas you'll find car-free HMOs work really very well, but you can only have car-free HMOs if you've got good infrastructure and transport links. So, I mean, I don't know if you can see that on your map where the train stations are, or if there's a way of seeing, but that's the sort of thing I might look for as well, or large employers. I guess you can generally just have a look around the map for that type of stuff, right? And I do like to drop the little Google man around and have a wander in the area as well, see what I can see. Some areas are so bad, even the Google man gets mugged. No, I'm just kidding. Yeah. Um, so yeah, no, this looks cool. So yeah, look, I think it pulls a lot of info in one place. Refurb's a big one. So obviously, tools like this are great to get an idea of, should I view this property? Should I go further down the road? And then naturally, you're going to do a more in-depth analysis once you've viewed and once you've got more information on the property. So your scenarios, I thought were interesting, and I like it because you can't be certain about where the prices will go, or what, you can't be 100%. But yeah, okay, you've answered my question. Can you edit those scenarios then? And I'm quite a risk averse person. I tend to go on the worst case, and if the worst case is still okay, then I'll proceed with something. So
can take those, definitely. Basically, we have the occupancy rate, which means, the opposite of vacancy rate. So basically,
mm,
how much time in a year the property would be with a tenant inside, the average property appreciation over the years, rent the property appreciation, and inflation. So in the worst case, I assume low property appreciation, high inflation, and low occupancy rate. The numbers here are perhaps it's a bit misleading because this is a BRR. So if we calculate the IRR or just on the cash that you left in the deal,
mm,
then basically because of that BRR, if it works well, it's actually you can get very good numbers because but for that I need to increase the almost 50% of the properties. I don't know if it's realistic or not with just only 10K. So
mm,
it shows very hypothetical scenario, but in reality, you can use the deal analyzer just to make sure that you get also with your assumptions of refurb and the GDV, if you still get, I don't know, IRR at around 15%, I think it should be okay.
mm.
Uh, you can also test the best case scenario, the worst case scenario, and you can play with the numbers to see where it takes you. Also, this is just for 10 years. You can see what will be the metrics if you hold and keep this property for 20 years, for instance. So, yeah.
I like that. And I noticed at the top it said the average yield for the area, which is interesting as well.
Yes.
So, yeah, that's cool. There was some, I know this isn't, I don't know how, if I'm going to get told off, and maybe you'll tell me this is off track, but there's a feature for finding these properties as well, right? So sourcing and finding.
Yes.
Uh, yeah, I think that might be because a lot of people here are going to be looking for deals. In terms of finding, if I wanted to find something that maybe I could add value to, that I could do something on, that, okay, nice. So we can see the price decreases. That's cool.
Yeah.
So what it's gone on for, and the fact that it's dropped.
Yeah, and you can see how many days the property is with us. Basically, it means that this is the time that we got this property from the agent. You can see the descriptions, key features on the
Nice.
premium plan, which you can get with the 60% off today. You can contact the agent. You can also send an email to the agent, rephrase it with AI. You can add properties to your watch list, and then you can get a notification if the price keep decreasing, for instance. Um,
Did I see commercial on that property type drop down as well? Because that,
I think we should have, yes. Let me see.
I think,
We also, by the way, another feature that we work with AI is to do like a prompt. So you can, this is what you wanted basically. Find me a property requires refurbishment in this postcode under 100K. So this is right now under work, but I think that if you want commercial, you should have here. Yeah, we have a few, almost 2,000 commercial properties right now in the system.
nice. I don't. Is that? To be honest, every time we meet, and I know I say this every time we meet, but you've added loads of stuff. Was this something that was added to the platform? Was this there
The
before?
commercial, I think they were there. I'm not sure
Okay,
actually, but yeah, I think that we had some. Um, yeah,
nice.
look, landlord is more designed for residential properties, but we do support also landlords that manage their commercial properties because it's quite similar in terms of, the data that you need to keep and documents and also how to manage the cash flow, which you can also manage on landlord. You can link your bank accounts, manage your cash flow over time, and generate reports to your accountant, etc. You can also track your mileage, lots of features. Steve, I think because we don't have lots of time, perhaps if it's okay, we can stop for questions now and questions.
Yeah, to be honest, as you said that, I looked at the time and realized what the time was. It feels like we've only been on for 10 minutes. So, there's a question there for you. It says, "What's your view on property filter?" I could jump, but I like to talk, so seeing as I'm here, I think they're fundamentally different platforms, right? So I would see Landlord as multifaceted. There's three, and Avaram might correct me, but there's three main parts to it. One is the management of the property. So if you're already a landlord, you're communicating with tenants, you're managing your tenancy agreements in one place, let you know when your EPC runs out. It will link to your bank to see when things have come in. Then you've got the lending, because we didn't really look at every aspect. Then you've got the lending sides. If you're looking for bridging finance, mortgages, that's all in there. And then you've got the analysis side as well. So property filter I've not used. I do use another software called Property Market Intel, and that one's more around quite specific stuff, short-term lets, HMOs, and it's there, but again, it doesn't cover the stuff. So they're very different softwares. I understand the property field. I'm not. I gather from people that use it quite like it. I gather it's quite expensive too, or that's the wrong way of putting it because the price is what you pay, the value is what you get. But I think it's probably the same for a month as this is for a year. So I wouldn't say it's an either or. It might be a case of using both.
Yeah, for us, it's basically to provide access to everything in one place, and because of that, the price is a bit lower than the other platforms. Perhaps, if you are a very active property investor, you basically invest in, I don't know, 10 properties a month, perhaps you need more like a more robust tool. But we support all the, I would say, average landlords, the property investors that invest from time to time. So you can get some of the functionality, and we also have a large functionality for free. And the premium plan is very affordable, and you can get it today in £40 for the entire year, or 120 if you want the premium plus, which can get you more for also for the entire year. So, and yeah, and we are keep enhancing the platform. We have tens of thousands of users using the platform right now. So if you haven't, you should try it. Let's take some questions. How you want to do it? Perhaps we can take some from the chat. Let's start.
Yeah, I tend to just grab them in order. That way, no one tells me off. But I've got one from David. So, Steve, what's the rough guide to putting property into a limited company, which is currently in your own name? I heard that you can put six into a limited company in one go. I'll give you a rough guide because it's quite an involved, and what I'll do is share information. This doesn't constitute advice, so I'm giving you information so that you can get some further advice. It's one of the things we talk about at the 2 days is I give five different ways to manage property in your personal name. I think what you're referring to is incorporation relief, because when you've got six properties, provided you're managing those properties to some extent, and that is quite a key part. So then you would likely qualify for incorporation relief under Section 162, which means you could move potentially your properties from personal name into a limited company and defer capital gains tax. Now, in doing so, if you were in a genuine partnership, I use words very intentionally when I discuss this. If you're in a genuine partnership and you can demonstrate that through things like bank accounts and so on, then you can also potentially claim stamp duty relief under Schedule 15. And so, in that scenario, there's every chance that you may well be able to move those six properties from personal name into a limited. Now, in order to do that, I don't want to oversimplify it. You will need professional support. You will need a tax specialist. It will likely take a couple of years. There will be, if you've got lending on those properties, the need to remortgage these properties and put new finance on because it will be a different legal entity that owns the property. So there are some nuances and some complexities to it, but the final result is often the juice is often worth the squeeze, I guess. So yeah, if you're wanting to read into it further, if you look up Section 162 incorporation relief, and I would also look up Schedule 15 stamp duty relief to see if you qualify for that. And if you're looking for case law, then HMRC versus Ramsey is where a lot of people derive the case law because this was tested. And so there's some fairly accepted principles around that. Hopefully that
Yeah.
answers that one.
I have to jump in just to complete it because basically, if you want to be prepared to get the advice or something to review it, then you need to use a platform like Landlord, basically just to put all the information that you have everything in hand, understand the numbers of each property, the ownership of each property. Um, so you can do it quite easily on the Landlord platform on the My Portfolio page. And then in one click, you can click on the export tab and send it over, or use the new feature of the team members and invite someone to review just this page. So basically, you can control the permissions and select just invitation to the data management My Portfolio and invite someone to review your portfolio. So yeah, sorry for the interruption. That's
No problem. So next one was Dill Saucer without the E. That's an app, I believe, a slightly different app. I can't. I've got limited info on that, so I couldn't really say. I don't know if you know Avaram.
no,
Sarah
no.
Sarah asked, is it best to be quite advanced with property investment before getting involved in a piece of software like this, or to make the most of it? No, I mean, the whole purpose of this is to help you right along the way. So I think all that will happen is the more that you advance the different features that you'll use. But what I like with Landlords in particular is that the UI is very easy to follow, or should I say that it's very intuitive. It's very straightforward. And speaking like a developer, Avram. Look at me go. UI, UX. Who
Right,
knows what
X.
comes next?
No
Um,
problem.
cool. I think the next one's for you. That's Steve is asking about lenders. Could Landlord help? I don't know if you've seen that one. Steve Harris.
Um, how, where are you in the chat? I'm trying to.
Miles away. I'm right up the top. I never scroll down. If I scroll down, I get anxiety.
Okay. Okay, so can you just repeat the question out
I'll
loud?
read it for you. Avaram, a man like you shouldn't read his own questions. So, got a couple of HMOs in a discretionary trust, let until end of 27 June, unencumbered. I'm thinking of remortgaging short term, no cash to buy a refurb property to sell, possibly to let. I need a lender. Could Landlord help me? I think the key thing is it needs a lender. Could Landlord help?
Yeah.
Value
So,
of
mhm.
current holding 850. Yeah, there's a lot. I think the long and the short of it is, would
Yes.
you be able to help?
Yeah, I think so. So, Sarel, if you can put the link tree on the chat, on those links you have. So basically, Landlord can help you understand the finance options online, but we also have team that can help you. So you can schedule calls with the team. Okay, you have now the link on the chat. So I think it's better to speak with the professional people in our team that will definitely be able to help you. I'm pretty sure. Yeah.
That's cool. Sorry, I was just clicking a link and being nosy. Right, okay. So, yeah, so I've seen the property at 700K. It's been on the market for a year. Cool. That's
It's either a bug or perhaps it's real. I don't know. Steve, is it possible for a property to stay at 700K for a year? I don't know.
yeah, yeah,
Huh?
yeah, yeah. Lots of different things. So, look, there's a few things here. There's lots of different potentials. Let's answer it quickly. I know you want me to answer it quickly. So, number one,
Yeah.
someone's not that motivated. They're not that bothered. They're just going to hold on until they get the money that they want. I've got a property that I'm looking at the minute. It's been on for over 2 years. They don't care. Wealthy people, they're just waiting for the money that they want. We know that when people are selling, especially investment property, HMO, stuff like that, if the property is profitable, then there's no pressure for them to sell. That said, I think there's a psychological thing that happens when a property's been on for a long time. Everyone thinks it's got the lurgies. That's my technical term. And so they just avoid it. And so it could be that now it's been on so long, people are going away. Some people won't drop the price. Some people can't drop the price. Uh, or people aren't approaching. So I would personally, if it's of interest to you, I would just go and investigate it. I would find the price that works for me and try and open a negotiation. People can only say no, but you'll find that some properties do sit. I've picked up a couple of properties been sat for a very long time, and there was negotiation in the price, but nobody was really trying to negotiate.
Yeah. Another suggestion, just click on the contact let me show you. So if you're on market properties and you found the property, just click on contact the agent. You will see the agent details. You can pick up the phone or send an email and then get more information why this property is listed for a year. Yeah.
Uh, Tracy, okay. Tracy's asked a question. Um, Tracy said some people in our academy they haven't been able to make the call. How would they go about getting the recording? Is that possible to get the recording? To be fair, what might I tell you what? I haven't told them this yet, Avaram. So this will be the moment that we announce this because I gather there's quite a few people from my academy here this evening that have come to learn. What I have done, guys, you'll be pleased to know, is I've also what's the word? Peer pressured Avaram to come and deliver some training for us privately in the academy. So I think that's next month, isn't it? January.
Don't worry.
Uh,
Yeah.
so I'll release the date of that soon, and we can focus on some different aspects of the platform that will be super useful for us in the academy as well. So leave that with me, Tracy. In fact, we're ready in hand. They won't need a recording. They shall have the man himself, but I'll also find out about the recording. Um,
The
if
recording
you,
of this session, this is the question?
yeah, I think she'll like
Oh,
the
yeah,
recording. This,
we will share it. Yeah, we'll have it on YouTube and
okay, great.
share it with everyone, definitely. Later.
Fantastic. Yeah, sorry. When you didn't answer the first time, I thought maybe you weren't going to share it. So,
No, I'm still off at the start. I really trust you now to manage it. I see that you are doing it very well. Or you just, I don't know if you just, show the confidence that you're managing the chat or just
are you
because,
suggesting that I'm not actually managing? I'm
yes,
not sure. I like you, Avaram. You're very honest. That's what I
yes.
like about
But
you.
it looks like you're in control, so I trust you to,
Yeah, 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 yeah. It's like a swan on the water with the legs kicking really fast underneath. Right. So, uh, Matt has asked if you had over 20K to start, how would you start? I'm pretty sure that's Matt that was on the one-to-one with Helen this morning, I believe. If it is, let me know, because better that we jump on if it is, and just go into that one, unless he's asking Avaram the question,
It depends
potentially.
on so many things, but basically, yeah, I think it's better to have like a mentor that can help you basically choose the strategy, the location. The 20K should be enough, not just for purchasing the property, I believe also for some reserves, and take into account legal costs, inspection costs, and other fees. But yeah, I think you can use the deal analyzer to see how much cash investment you need, if you found the property or just hypothetic deal. But I think this is because of that we're doing those webinars together with Steve, because I think it's all about knowledge, education, but also technology. So once you have the education, you have the strategy in your hand, then you can jump into the platform and analyze, crunch the numbers and make sure that it works. It actually works. So I think it's a
100%.
combination. You have like a great mentor that can help you understand what is the best thing to do with the 20K. And we have the tools that can show you the numbers.
Absolutely. I've just popped the link back in, by the way, for anyone who didn't already book or grab a ticket for the 2 days. I've just popped that link back in. You can grab yourself a ticket for the 2 day training. You don't need to worry about the date yet. There's 24 to choose from. But like Avarem says, I think the combination of having the knowledge and then having the tools to execute on and to make that easier, especially when you're analyzing properties, right? That's really where you want to be efficient. The more deals you can run through, the quicker you can run through them, the more effective you're going to be as an investor. Okay, so there was one up here. Sarah asked, should property investors be concerned about MTD, so making tax digital? Look, I
Um,
think
uh,
yeah, I think,
I think also for people that manage their properties in a personal capacity, not for not for limited companies. And again, Landlord supports MTD. By the way, we have the option on the premium plan to file your tax electronically. And if you
wow.
want to be part of the MTD pilot, you can reach out to our team. Sorry from our team. I think in this webinar, we can basically get you into the pilot so you can start file your tax return on a quarterly basis. Yeah, it's all about technology and being digital. So Landlord is a great place to start. Having said that, limited companies will not be required, I think, for MTD. It's not, they're not speaking about it as of
Not
yet.
yet. Yeah,
Yeah,
well,
not yet.
I'm sure at some point in the future it will be there too. But yeah, should you be concerned about it? No, but you should be prepared for it. And so I didn't realize that you guys have support that feature. So
You have the open
that's cool.
banking. You can link your bank accounts to Landlord, manage your cash flow, and then basically send all the information to our partner line Tide. It's integrated into Landlord, so you don't need another account. And then from there, you can actually file your tax return electronically to HMRC.
That's brilliant.
Yeah.
Fantastic. Cool. Excellent. Angela was asking how the refurb's calculated. That where do you get that information, or how does that? I know it's AI generated, but
Yeah,
how,
it's generated currently based on the what we have, like if you use the Chrome extension on the Rightmove page, Zoopla on the market page. The next level will be next year when we will hopefully launch the new Reefer Planner with AI. So it will be also based on pictures, floor plans, and prompts that you will add to the analysis. Yeah, but for now it's based mainly on text that we have on the property. So it's not fully accurate. You need, of course, but you
of
can use
course, yeah.
AI and ask questions.
It's an indicator, right? Yeah,
Yeah, definitely indicator.
it's an indicator. Um, okay, Sarah was asking, should I sell two properties in personal name, just concentrate and expand the ones in LLC, as transferring personal to LLC is not economically viable. So just to be pedantic, but LLC is an American term. I know what you mean. So you mean limited company. Yeah, often you'll find if you're just going to move your existing properties, if there's just two properties, you're going to move into a limited company, it will often cost more than it will save, certainly for a number of years. And so it may not be a worthwhile move for a lot of people. So you might want to consider leaving them as they are for the time being, but just concentrating on moving forward, as you say, making sure that those new properties are in a limited company. Um, Maria's asked you, does Landlord basis analyzing figures on properties in Scotland as well?
Yes, you can analyze this in Scotland. I'm not sure how much data. It's basically based on the APIs that the platform connected. I think in some areas you should also get the postcode insights. We're trying to enhance it as much as possible. But definitely, you can analyze the deal with the numbers and see what cash flow you'll get. It's the same for all areas. Yes.
Awesome. Um, Sarah wants to know, do real estate agents pay to use your site?
No, we pay them. We pay for it's basically, it's one feed that we get everything. It's not that we are working with hundreds or thousands of estate agents. It's basically we paid in order to enhance the platform. Basically, we don't get commissions even if we refer someone to an agent. Perhaps we'll do it in the future. For now, the main thing is to have everything in one place. Because of that, we wanted the listings in the platform so it will be available to analyze in a sec from the system.
Cool. Okay, so uh, Alistair, I think you've spoke to Alistair. That's fine. Maria said, "I'm putting my main home on Airbnb and moving into rented accommodation. Can I set up a limited company for the income received?" You could effectively do rent to rent with yourself. Yeah, so that is something that you can do. So let's say you moved from your primary residence now and moved into rented accommodation, you set up a limited company, provided everything you do is done at arm's length. So, provided your limited company pays a legitimate rental amount to you for renting your property, then that can operate the short-term let. And so if you are going to do anything like that, then I strongly recommend coming to the 2 days because we talk about looking at the demand, calculating the numbers, how to be tax efficient with that, how to be on other platforms because I wouldn't personally only put it on Airbnb. There's about 30 different platforms that you should be listed on. If you just go on Airbnb, you're going to be missing out on the majority of the market. Most of our 80%, I'd say 20% of our bookings, let's do it the other way around. 20% of our bookings come from Airbnb, and we got 32 short-term let properties. So, to give you a bit of context on that. So yeah, if you haven't already, Mira, definitely suggest you come along, and we can help you a bit more with the limited company side. Few of these are just statements. I'm looking for the questions. Daniela, help please. I have the property I currently live in and my partner the same, and we want to buy one to move in together. What's the best option to keep the other two? Um, currently my partner's the same. Okay, so you and your partner both have a property. You want to buy one to live in together. What's the best option to keep the other two? It's likely going to come down to lending, really, isn't it? So that's probably one you're going to want to speak to. I'm assuming that's what we're referring to, rather than the tax aspect. But that's probably the link that you put in. Is it? Would
Yeah,
that
but
be?
that way, if they want to do like basically, it's like to remortgage as a buy to let, I believe. Like if they are moving to a third house, a third home for both of them, and they want to generate income from the existing properties. Yeah, again, just use the link tree and schedule calls with our mortgage team. I think they can advise if the question is about finance, I believe. Yeah, because then you can, if they are unencumbered, perhaps you can also get some capital out of those properties to purchase the third one potentially. But yeah, I think it's definitely a call for an advisor. Mildred asks, can you recommend a company that can move from person? like an advisor for moving to limited companies.
I can. Mildred, do you mind sharing how many properties? Because just to give me a bit of an idea, and then I can send you over a contact for the suitable person. Because if it's one or okay, fine, yeah. So what I'll do, Mildred, I've just sent you my email. If you drop me an email, then I will. Put you in touch with someone that will be able to help you. There's a firm that I use that they specialize in that. They're the largest firm that specializes that in the UK. They've won a lot of awards. They're very good. So I'll put you in touch with.
Never ask if it's only one. Never ask just if it's only one.
Yeah, if it's only one, it's a little bit trickier, to be honest. Unfortunately, often the thing to do is to leave it. It's expensive to sell it into the company. It won't qualify for incorporation relief, and so and same for Saro as well. Sometimes you can get like a limited company to manage those properties for you, but again, it's got to charge fair market rate, and there's a cost to having the limited company. So if it's only one property might not be enough. Um, and okay, yeah. So Gordana, yeah, same same for yourself as well. That's fine.
I think we have
One thing I always say to people actually, like, if you've got a property in your, let's say you got one property or two properties, personal name, they're buy to lets. If you are doing things like this, you're coming, you're getting the knowledge, especially if you're coming to things like the 2 days where we look at revenue generated. If those properties are just typical buy to lets, I also ask the people if you had the knowledge now or you had the knowledge then that you have now, would you invest in those exact same properties? If the answer is no, then selling them is a legitimate option. And people say, I don't want to sell it because I don't want to pay the capital gains, I don't want to pay stamp duty on something else. But let's say you had 200K tied up and you're going to walk away with 160 after everything. If you know how to get a better return from that 160 than that 200 is currently generating, it still makes logical sense. More tax efficiency, higher returns. I got properties, if they were buy to let, they'd make 200 quid. Running as short term lets, they make £2,000 a month. Same for exactly the same for HMOs as well. So it's extreme, so people don't like it or they're attached and they're comfortable with what they're doing. But I would genuinely consider if they're just typical buy to lets and they're just generating standard vanilla returns as buy to lets, going and doing some training and doing that next step forward to get a higher cash flow because and obviously I don't have context on everyone's different investment, but people don't want to do it because they don't want to pay capital gains or stamp. But the truth is, sometimes the final result, if we're investing, because they always say, "Can I move this one into a limited?" Well, that's probably not worth it. But if you sold this one and bought a better cash flow investment, maybe it is. That would be my, I guess, stretch for you guys.
I think we have the last question, Steve, from Joy. Um, would it be worthwhile listing my property in my private name to the limited company I set up and have the limited company let it the property as a short-term let? Okay.
Where are you reading that?
This
Oh
is
yeah, that's
go
Joy's question. Sorry,
to
I got you.
can
Yeah, you can. So yeah, a similar question really. So worthwhile leasing my property in my private name to the limited, has a limited let as a short-term let. Yeah, it's actually exactly the same question as who asked that before. Somebody else asked the same question before. It's exactly the same. Yeah, you'd effectively be running rent to rent with yourself. So you absolutely can do it. What I would say is again, if you're going to do something like that for the sake of £99, please get the education. It will absolutely change the game because if you're going to be running short-term lets, you need to know about the compliance, the fire regulations. You need to know about having the correct lending. You need to know about being tax efficient, structuring it properly. You need to know how to optimize on the platforms. You need to do so many things to manage to get housekeepers. There's so many aspects to that that first and foremost, it's a great idea, and it's a great action to take. But I always say that you need to combine the knowledge with the action. So, if you're doing things like that, then 100% for all those people that I'll pop that in one more time. But if you're doing anything like that, then really come along to the 2 days. That's the exact stuff that we talk about is how to set up short-term lets, how to optimize them, how to get direct bookings as well. Joy's already been on the 2 days. Well, then Joy, get a limited company, do rent to rent with your house. You already know how it goes. So yes, the short answer to your question is yes, you can do that. Just
Okay.
make sure you're documenting what you're charging, why you're charging it, and everything is fair market rate, and that the limited company is legitimately operating the short term let, but it's often going to be a tax efficient move. Cool.
All right. I think we can keep going, I think all night long, but
No, you look tired. I can tell you're tired. So I can keep going all night long. And I
I know
think
you.
most people here know because they've been with me enough times that I can keep going. But look, Avaram, I get it. I get it. To be honest, we've answered all the questions. I'm just kidding.
Yeah, yeah, yeah.
What I think would be nice, Avaram, seeing as we've got all these people here, they've taken the time out of their evening. Maybe if you could share some words of wisdom to inspire everyone here on their journey, I think that would be nice.
Yeah, for me, I think it's all about education and technology together. This is what we are trying to do with Landlord, and because of that, we are working with people such as you, Steve. So I highly recommend to go to get this education. It's very affordable. Like also technology is very affordable. Think about, like if you pay for softwares that can actually help you manage your portfolio and crunch the numbers and make better decision based on data less on intuition. So I think the combination for me, it always was one of the goals that we are putting every quarter to see how we can get our users more educated, but also using more technology to help them running their property businesses. So for me, this webinar was great as always, and like the deck about the budget was so important. We will share the recording with everyone. So thank you very much, Steve, for your time. Few words from
Thank you,
you
Avaram.
before. So don't forget the Black Friday promotion of Landlord might end today. This is the goal. Perhaps we'll keep it through the night. So you have the 60% off on all of our premium plans. And you have the promotion also, I think it's just for today, like the 99 pound for the 2 days instead of 320 or 380.
For instead of 399. And there are
Okay.
people that come to the website and they buy for 399, but that's because they don't come to these trainings.
Okay.
And so I would like to say, Aviram, thank you for everything that you do. We appreciate the fact that you are making our life easier as property investors. I think people will agree. And you've done that in a very affordable way, which we're also grateful for. So a big thank you for that. And great to see all of you guys on here. Well done for showing up. Well done for taking time out of your Sunday evening. Hope you've taken value from this. I hope you found it useful. And I look forward to seeing some of you at the 2 days. And those of you that already been to the 2 days, or those of you that already being mentored and supported by me, I look forward to seeing you probably Tuesday evening. And some of you I saw this morning, you came back for more. So 10 out of 10 to those guys, not messing around. But do what you're doing right now. Keep building knowledge, keep getting out there, keep getting after that, after it, should I say. And again, Avram, thank you very much.
Thank you very much, Steve. Thanks, everyone. We'll see you in the next webinar and stay tuned. Thank you very much.
One thing I was going to ask you, Avram, who is your favorite property educator?
Steve Doran.
That's the correct answer. Okay, brilliant stuff.
Don't tell, don't
Everyone
tell
heard
the
it.
others. No, joking.
And it's on the recording. Take care, guys. I'll see you later on. Bye bye.
Bye bye.